If you're like the majority of homeowners in the United States, your mortgage is the single most significant monthly expense. Fortunately, there are a number of ways to reduce your mortgage payments, which can free up cash for other important goals, like saving for retirement or building your net worth. Hello everyone, welcome to Success Wisdom. If you're new to this channel, do like and subscribe to the channel. In this video, we will talk about how to reduce mortgage payments. So whether you are looking to lower your current monthly payment or want to start preparing for future mortgage refinance, keep reading for helpful advice. The number one way to reduce mortgage payments is to make an extra payment each year. For most people, a home is the most expensive purchase they will ever make. As a result, it can be difficult to find the extra monthly money to make an additional payment on your mortgage. However, creating an extra payment each year can significantly impact the total amount of interest you pay over the life of your loan. In addition, it can help you to pay off your mortgage more quickly. Of course, you should always check with your lender before making any payment changes. But if you are looking for a way to reduce the interest you pay on your mortgage, making an extra payment each year is a great place to start. Number 2 is to reduce mortgage payments to refinance your loan. Refinancing can be a great way to save money on your monthly mortgage payments, but it's essential to understand the potential risks and benefits before deciding. Refinancing your loan can reduce interest rates and achieve a more affordable payment. Mortgage refinancing also offers the opportunity to shorten the term of your loan, saving you money in the long run. Additionally, if you have built up equity in your home, refinancing can provide you with the cash that can be used for major purchases or home improvements. When considering mortgage refinancing, you must compare offers from several lenders to ensure you get the best deal possible. Also, consider the terms of your new loan before committing carefully. The number 3 is to consider a shorter loan term. While your monthly payments will be higher with a shorter loan term, you will pay less interest over the life of the loan. This can be a good option if you can afford the higher payments and want to pay your mortgage as quickly as possible. Number 4 way to reduce mortgage payments is to make bi-weekly instead of monthly payments. For most people, their mortgage is their most significant monthly expense. Any opportunity to reduce the amount of the mortgage payment can free up much-needed cash for other purposes. Making bi-weekly instead of monthly payments is one way to accomplish this goal. Doing so, you'll earn 26 half payments each year instead of 12 full payments. This will reduce the overall interest paid on the loan and shorten the loan term. For example, on a $200,000 30-year fixed-rate loan at 4%, you would save almost $9,400 in interest and pay off your loan for an 11 months early by making bi-weekly payments. While there may be a small fee to set up this type of payment plan, it is generally worth it in the long run. Before making any chances to your mortgage payment, talk to your lender to discuss your options and ensure there are no negative consequences. Number 5 way to reduce mortgage payments is to get a lower rate. A lower mortgage rate means that you will have lower monthly payments. This can free up some extra money each month, which can be used to pay off other debts or save for future expenses. There are a few different ways to get a lower mortgage rate. One is to shop around and compare rates from different lenders. Another is to negotiate with your current lender. If you have a good payment history and are in good standing with your lender, they may be willing to lower your rate. Whatever option you choose, getting a lower mortgage rate is a great way to reduce your monthly payments. If you like this video, don't forget to like and subscribe to the channel. Number 6 is to reduce mortgage payments by making lump sum payments. If you have some extra money, making a lump sum payment on your mortgage can reduce the amount of interest you pay over the life of the loan. It can also shorten the term of your loan, saving you money in the long run. When making a lump sum payment, specify that the payment will be applied to the loan's principal. Otherwise, your lender may apply the payment to your next month's interest, which will not reduce the overall interest paid on the loan. Number 7 way to reduce mortgage payments is to get rid of private mortgage insurance or PMI. Any homeowner with a private mortgage knows that this fee can add hundreds of dollars to your monthly payments. And while PMI is meant to protect the lender in case of default, it does nothing to benefit the borrower. Once you have built up enough equity in your home, you are paying for a service you no longer need. So how do you get rid of PMI? The first step is contacting your lender and requesting that they remove it from your mortgage. They may require you to provide proof of home ownership, such as property tax bill or homeowner's insurance policy. Once you have provided this documentation, the lender should remove the PMI from your mortgage. If they refuse, you can try contacting the servicer of your loan. If all else fails, you can sign up for a program through the federal government known as HOPA, which stands for the Homeowners Protection Act. This program will cancel your PMI automatically once you have reached 20% equity in your home. So if you're looking to save money on your mortgage payments, getting rid of PMI is a great place to start. Number 8, way to reduce mortgage payments is to negotiate with your lender. Homeowners having difficulty making payments should contact their lender as soon as possible to discuss their options. Many lenders are willing to work with homeowners in danger of defaulting on their loans, and they may help reduce the interest rate or extend the loan term. In some cases, the lender may be willing to work out a payment plan to make it easier for the homeowner to stay current on their loan. By taking advantage of these options, homeowners can avoid foreclosure and keep their homes. Number 9, way to reduce mortgage payments is to sell your home and downsize. By moving to a smaller property, you may be able to reduce your mortgage payments significantly. Of course, this isn't a decision to be made lightly. Before downsizing, carefully consider your needs and budget. If you're confident that a smaller home would suit you just fine, downsizing could be a great way to reduce your monthly expenses. The number 10 way to reduce mortgage payments is to file for bankruptcy. Many people are struggling to make their monthly mortgage payments. If you're one of them, you may wonder if there's anything you can do to reduce your payments. Another option is to file for bankruptcy. When you file for bankruptcy, the court will order your lender to reduce your monthly payments to an affordable level. This can give you some much needed breathing room in your budget. While this may seem like a drastic step, it can help you get back on track financially. Of course, filing for bankruptcy is not a decision to be made lightly. You should speak with a bankruptcy attorney to discuss your options and determine if this is the right choice. There are just a few of the many ways you can reduce your monthly mortgage payments. If you are having trouble making ends meet, talk to your lender about your options and find a solution that works for you. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment below. Thank you and goodbye.